Good afternoon, everyone. Thank you for joining us today. I'm Sarah Minhinnick. I'm the Head of Issuer Relationships here at NZX, and we're very pleased to be having you with us for our November Retail Investor webinar. This month's webinar has a tech sector focus, so we're very happy to be joined by Dr. Hartley Atkinson, who's the CEO of AFT Pharmaceuticals. He'll be joined by his CFO, Malcolm Tubby. After they present, they'll be followed by Craig Herbison, who's the CEO of Plexure, and Craig will be followed by Victoria Potterina, who is the CEO of TrueScreen. So a fantastic lineup today. So we will start with AFT Pharmaceuticals. Dr. Atkinson is the founder and CEO of AFT, and as I said, his CFO Malcolm is presenting with him. AFT is a pharmaceutical company that develops, markets and distributes a broad portfolio of pharmaceutical products around the world. So with all of that being said, we'll pass over to Hartley and Malcolm to present their slides.
Okay, that should be it.
Good, thank you. Can everyone hear us okay?
Absolutely.
Right, thank you very much. So welcome everyone. Just going through a quick presentation today. Some of the slides I've glossed over, but we'll leave some extra slides in so you can have a look at those later. So this is obviously our presentation, and then flicking on to the standard disclaimer, which is here, but then flicking on just to look quickly at our history for those of you who don't know anything about us. We were funded back in 1997, literally in a garage, with startup capital of $50,000. And I guess the point we make there is we do know and value very much, capital, cash flow, all those financial things is very important to us, having started off with a very modest startup capital. 2004 was important. We started our drug development work, namely of Maxigesic. In 2005, similarly, was an important time spot where we expanded into the Australian market. And then our first shareholder actually came on board only in 2014, where we raised a little bit of capital out of the United States, and then we floated on the New Zealand Australian stock exchanges in 2015. We then did raise the money, use the money that we raised to accelerate our R&D program, which did generate some losses, and then we moved back into profit, especially in 2020, the last financial year. So just to flick to the next page, you can sort of get a feel for this progression. You can see on the top is our net sales every year. You can see we've grown sales year on year on year. Just something we've always focused upon, sales growth. And then you can see the other financial factors such as cash flow improving, and the same also with our operating profits. So once again, this comes back to what I mentioned briefly beforehand. We raised money to do the R&D phase. Effectively, the R&D phase has predominantly mainly been completed and largely successfully. Pretty much every big study we've done, we've had really nice results. So a lot of the risky part really is the R&D, and now we're working hard on the commercialization of those products around the world. So flicking just to the next slide, look, you can see presently on those pie graphs on the far right, predominantly at this stage, if anything, we're an Australian company with some sales in New Zealand in the black. The bits are Asia in the blue and the yellow international. Those are the bits that should really grow over the next kind of 5 or 6 years. Then the next slide, look, I'll leave you to read that. It's just showing you that all our key parameters are improving in terms of profitability, cash flow, equity, number of countries we're selling in, etc. So that's all going in the right direction, which is nice to have all those green arrows. And looking at the next slide, our business, just to try and explain it better to you, it's really a mixture of our local Australasian business and then our international business. So this just looks at our Australasian business. It's a pretty diverse business, but we are focused on some key areas being pain, eye care, vitamins, allergy, GI, dermatology, and hospitals. So it's not just a random kind of hodgepodge of products. It certainly looks at certain areas, and we've got some strong positions. We've got the #1 paracetamol and ibuprofen product in the Aussie market, with a #1 lubricating eye drop, and then New Zealand, for example, with a #1 allergy company in the whole market. So look, that just gives you a bit of an idea about our Australasian business. To flick to the next slide, what our business is about, quite a lot of it in terms of our R&D, is it's not all necessarily about new chemical entities. There's a lot of potential to repurpose, redesign, improve upon existing molecules. So our synergistic combination of paracetamol and ibuprofen is one example, but there are other examples too in our R&D portfolio. So that's very much what we're doing, is improving upon old molecules, doing the R&D, selling them locally, and then also expanding around the globe. So that's that part. The case study here, we've got Maxigesic as an example. What it is too is it's not just one product, it's a whole portfolio. We have the tablet. Tablet has patents that go out until up to 2008 in the Australian market, sorry, 2028 in the Australian market. But it's not just that, it's also other dose forms such as Maxigesic PE, which has a longer patent. There's a hot drink, there's a dry stick, intravenous formulation has a couple of patents there. The advantage of the IV is that it's a stronger non-opioid analgesic. Hospital market is actually very attractive around the globe, and independent market research group Delve Insight actually picked this as being the #1 new hospital analgesic product in the next 10 years. So that was interesting data for us to see, given that it was independent from us. And we also have other forms such as Maxigesic Rapid as well, which has a new patent around it as well. So flicking on to the next slide, sorry, going quite quick on all this. This is our R&D pipeline, so it's not just Maxigesic. We also have a product called Pascomer, which is an orphan drug, which is a stabilized form of topical rapamycin. So we use some of our proprietary dermal technology we've used in our product called Cristoderm, and we've been able to use it to stabilize the rapamycin, which is not an easy thing to do, as it's an unstable, easily oxidized molecule. NZX is a drug delivery device, performs extremely well, literally 10 times better than German gold standard in terms of delivery rate, and is 1/10 the size of the German gold standard as well. And that has various patents out till 2036. And at the moment, we're just looking at starting our first clinical studies next year, having successfully completed the development work on it. So flicking to the next page, important part as well is growth drivers. Just to make sure people are aware, because we have seen this comment that some people sometimes have thought that our Australasian business maybe is a bit of a sunset business, but that is certainly not the case. We've worked very hard on in-licensing a lot of products, and we are working on growing this. We would aim to double our Australian business, for example, over the next 4 or 5 years. And in terms of new medicines, we were targeting this year, we were targeting 11 new approvals across Australia and New Zealand. Pretty confident that we will exceed that easily. And then next year as well, a further 38. So expanding our Australasian business is also a key part. And then the other part is rest of the world, where we have Southeast Asia and rest of the world. So basically, they made up about 13 to 14% of our sales last year, but over time, as we expand the number of countries, we expand sales growth within those countries, and we add in new dose forms of Maxigesic, will be the first product off the block in most of these countries. We basically would grow the rest of the world business. And the Asian business as well, we're growing that separately. Some of you may have seen, we just recently started up a Tmall site, flagship store in China. And then we also have existing sales operations in Singapore, Malaysia, just starting up Hong Kong as well. and also extending that to China in the future, and working on sales quite soon from South Korea. So that part of the business will grow. Flicking to the next page, this is our global map, where the countries in yellow, we've launched Maxigesic, countries in blue, we've licensed them and not yet launched, and countries in white, we're still working on, with obviously key ones being China and United States and Brazil are probably the key remaining countries that we're working on. But those will drive sales over time as they turn to blue and then also then to yellow. So just flicking onto the summary page. So really the outlook and what we're working on is, as we've said, driving those international sales. So it's accelerating the number of countries we've launched in, and also adding line extensions such as Maxigesic IV. Had a flurry of activity recently with deals. Seen some comments on the share chat and things. People think we're mainly putting these through prior to our 6-month announcement, but look, these deals generally probably went a bit slow with the major COVID period, but it's as though everyone's suddenly kind of woken up, and these deals are now starting, to all come online and kind of into place. So extending international licensing is important. Certainly targeting quite a few Maxigesic IV deals over the rest of this calendar or financial year, and then also moving on the ones we did last year in terms of getting the product sold. Upfront payments are important for some of the larger territories, such as, for example, United States. So we haven't done a deal there yet. We're working on it under diligence and things like that. So if we can pull off a US deal, for example, this calendar or financial year, that would certainly make quite a big difference to our profitability. Then Australasian sales, still very important, driving those hard with new product launches. And on the OTC, we're launching that as well, sales and new products there, and same with Maxigesic as well. So we've got a broad portfolio, which we're fortunate to have, because clearly with market disruptions around COVID, it's nice to have that wide, broad portfolio. And that's been important for us. So really, just to summarise, we're still pushing on with our growth and profit between 23% and 58%. We're still sticking to that $14 to $18 million that we gave out at the beginning of the year in terms of forecast. And then as well, we're looking over this financial year to decrease our debt and net debt position. And then I guess we're just flagging in the medium term, once we have the debt reduced, profitability improved, we'll certainly look to pay a dividend, and that's certainly something we take seriously and we're working on. So look, apologies for flicking through that very quickly, and hopefully that's given you an overview of what we're up to. Thank you very much for your attention.
Thank you, Hartley, and thank you, Malcolm. That was a great presentation. We've had a few questions come through on the chat, and if you do have questions, certainly please do enter them in there. The first question is, do consumer habits around the world differ, and does it affect how you plan your strategy in different geographies?
Yeah, that's a good question. Consumers do differ depending on the geography and jurisdiction. There are also some regulatory differences. In some places, for example, our Maxigesic is a prescription medicine for the tablet. Some places it's OTC. And then some markets, for example, like Russia, very strong with hot drink sachets and things like that. So there certainly are some differences. It's good to have a range of products to suit the local kind of market, where, as I was saying, the sachets are very strong in some markets. So yeah, there are certainly some differences. Some markets are more a paracetamol market, some are more an NSAID market. So I don't think you can avoid that, but certainly we have potential in pretty much most markets.
Great. The next question is, What has been the impact of COVID on AFT, and have you had a sales bump? Do you think this is sustainable going forward? Do you think the sales momentum will continue at a similar pace, slow down, or speed up?
Sure. So look, and just in terms of the short term, we obviously can't comment on anything on this 6 months ahead of our results, which are going to be in about a week's time or something like that. But I mean, just in general, I think you've seen, we said that we're anticipating our predicted profit results. So we see things on track. To be frank, we've seen product sales of some products go down, which is sort of flagged, and then some go up. But overall, it's really important. We've got this broad range of products, which really gives us a lot of strength in a changeable market, which really is what we've seen with COVID, you know, where there's been changes in consumers' access to shops and to doctors and things like that. But having a broad portfolio is pretty important. We don't see we're a COVID company at all. We can pivot a bit around a few COVID-related products, but really long-term, it is really not about COVID. It's about carrying on with the plan we've been talking about for the last 5 years. We're starting to deliver on that, and we just want to keep on, you know, delivering on that. That's the key.
Great, thank you. And then one last question before we wrap up with your segment. How does AFT stay ahead of trends around the type of products that people are seeking over the longer term?
Yeah, in our local markets, we do look carefully at that, and we can take advantage of that. Like, just for example, we saw that in Europe there was a big trend to preservative-free eye drop products, so therefore all our range of eye care products are all preservative-free. So, you know, that's the thing, we look at the big picture trend, and then we work our portfolio around that when we're doing our in-licensing work. And we also see the consumer market is not as affected by government pricing policies and the likes. So therefore and there's more of a trend towards self-medication and things like that. So those are sort of trends we're trying to work onto. And then there's a move against opioids, which we foresaw a long time ago, and it's a real problem around the world. Therefore, something like Maxigesic is an alternative to opioid-containing analgesics. So there's just some examples.
Okay, great. Well, thank you very much for the presentation and for answering those questions. If you're an attendee and your question didn't get answered, please do send it through to us after the webinar, and we'll make sure that that gets through to Hartley and Malcolm and that you get a response. So thank you, gentlemen. We'll move on now to Craig Herberson, who is the CEO of Plexure. Plexure is a mobile engagement software company that works with global brands to engage consumers on mobile devices and drive them to store. Plexure has also had an announcement out this morning that they're conducting a placement and share purchase plan. So that's been quite topical and very good timing for having this presentation. So over to you, Craig.
Right. Okay, so hello. Hopefully you can hear me and also see my screen. Seems to be playing up here, but I'll start at the beginning. So hello everybody. Yes, 2 announcements this morning. So we're in trading halt. We've announced an underwritten 32 million capital raise placement and also a 5 million SPP share purchase plan for existing shareholders, as well as our half year. And so those announcements are available, and you'll see we've had a 23% increase in our revenue in the first half to 14.4 million. We've given guidance to year end. Just in terms of the slideshow there, I guess, have I got control of that, or has someone got control of that one at the moment? It seems to be bouncing around. All right. Okay, so just to talk about sort of the business then. Sarah, have you got the presentation showing, or
I've got control because it wasn't working. Just let me know when you want slide changes, and I'll go through.
Oh, Okay. This is a great slide to start on then after those sort of announcements. So in terms of our business today, we describe ourselves as a global mobile engagement solutions provider. Effectively what we do is we build offers that goes in through customers' apps, which are then deployed to help drive foot traffic into physical retail to grow customers' value when they're there. So today we have actually 214 million registered or users on our platform worldwide. So these are people who have downloaded our customers' apps in 60 countries. And to give you a feel for the size of the technology underneath this and what's required, 6.4 billion API calls per month and 740 million push notifications per month. Push notifications is just one small part of our proposition, but just gives you a feel for the scale of sort of the engagement that we deliver, for our customers worldwide in 40 different languages and 165 employees today. So next slide, please. So just to give you an idea of kind of where our market penetration is around the world, in those 60 different countries. A key customer, McDonald's, foundation customer of ours and shareholder, 9.9% of the company, and will be holding their pro rata value during the raise. Superindo is part of the Ahold Delhaize group, which is a global grocery group, the 7th largest group in the world. It's the first market deployment with them, and the hopes is to deploy in further markets in the grocery category with them. White Castle is an iconic burger company in the US, and Lord in New Zealand, everyone on the call should be well familiar with. Next slide, please. Okay. So I guess why we have a business today. We have a business today because of effectively online commerce, Amazon and the like. Physical retailers today, those still have physical stores. And also they still realize and appreciate that customers coming into those stores create more margin by being able to walk around and pick items up, something which e-commerce really hasn't been able to enable yet, which is the ability for someone to walk into a grocery shop with a shopping list, which is say, for a basket, and walk out with a trolley. So what we do is we build incentives and offers which are in-store only and drive people to those physical environments and have people pick up, fill trolleys and fill baskets. Next slide. I'll just quickly through this in the interest of time. So how we do that, I guess there's a lot of data which is ingested. First of all, we have the customer data because they've downloaded somebody's app, a customer's app. So therefore we get the customer ID as well as the device ID and other personal information they've supplied as part of that registration. We then add to that weather and other contextual information, sporting events and other things like that, which then help us build the opportunity contextually to send somebody a stimulus to get them into a physical retail environment. Because we integrate into POS, point of sale, we can see what their transaction history and behavior is. We can see what they buy, what they didn't buy, what other customers did and didn't buy. And all that data is poured into our sort of personalization engine. And through that data, then we can run our decisioning or offer over the top of that, which is increasingly we let the machines do that with machine learning, and then obviously with algorithms creating the AI, which allows us to learn what a customer's behavior does or doesn't do as a result of receiving that offer. Okay, so onto the next slide. Okay, just to give you an idea, we generally don't build the front end. We have built the front end experience for our customer in grocery and Superindo, but normally speaking, we just provide the platform, the personalization engine that empowers all of this. But to give you an idea of what the customer experience looks like, on a customer's app, the homepage and banner advertisements, that tool allows people to serve those up to customers, and we can learn the behavior from what we see they look at and what they click on. The offers and promotions is kind of the core personalization engine that understands one-to-one what that customer is or is interested in, is going to have them moving into that store and buying. Push notification or messaging is the thing which actually stimulates that. Plus we use other channels, email and SMS as needed by customers, but on the device, the primary one is push messaging. And then we have a couple of loyalty dynamics that sort of come out of the box, stamp cards or points, earn and burn. We do believe that personalization, or the outcome of personalization, is loyalty, but these are sort of two functional personalization products or tools that we also sell. And then gamification. So gamification on the device certainly proves very effective for our customers to engage customers in different campaigns and get them sort of better deals in terms of what they might be interested in purchasing. Okay, next slide, please. Next slide. Yep, there we go. Okay, so in terms of the markets that we're in, the addressable markets, the mobile customer engagement platform market, we recently had a very good outing of the Gartner Magic Quadrant that was released last week. So we are the leader in the niche category, niche being that we deployed in 2 categories, being QSR and grocery. So you'll see if you have a look at that information, other players within the mobile customer engagement platform market expect to be 38 billion in value by 23. So there's a lot of addressable market there. Loyalty management platforms, it's a $7 trillion industry by 2023. That's that point, soon and burn or coalition loyalty program market. And then mobile order and pay. And I guess what we're seeing, the point here around COVID is that people being able to engage with brands at distance and buy at distance has increased through COVID because people aren't able to go into physical stores as such, but they're able to pick up, collect, or drive through. So we've also built mobile order and pay and deployed that for one of our key customers in Japan, who has 20 million monthly active users there. And that has enabled people to sit at home, purchase food, walk out, hit a GF fence and pick up on curbside, through drive-through, or have delivered. So that's an additional part to our proposition. Okay, next slide. Thanks. Yeah, so I guess in terms of grocery and our first deployment to grocery for Super Indo, I think the important statistic here is the increase in average basket spend, 55% for the app user versus the non-app user. This customer had a business plan to achieve certain results within a year. We achieved all those results within the first 2 months. So that just really shows the opportunity that app-based customer engagement can have within the grocery category. Okay, next slide. Next slide, please. Okay, so this is sort of quick serve restaurant, or the quick serve restaurant industry, and just to give you an idea of how our order and pay platform can provide some pretty significant uplift in terms of average spend for customers, the number of monthly active users I've talked to, and I think importantly, these apps, once powered with this technology, can be extremely popular. The app that we have, and this one in particular, remains in the #1 in the App Store in this country and has done for quite some time. So there's a lot of sales contribution which is made. Between 7 and 9% of front counter sales now goes through this app and the technology, which is pretty significant. Okay, so I'll just pause there in the remaining time and take any questions.
Thanks, Craig. That was great. We do have some questions. The first couple have a geographical theme, so I'll start with those. Why the concentration of Plexure offices in North America? Is this an area of the world you are looking to push into?
Yes, absolutely. So we have some key customers in America, being McDonald's headquarters, but also White Castle. North America is a fairly sophisticated market for mobile engagement, and also highly franchised market. So we work for these brands that have commonly purchased items that are sold largely undifferentiated but for price, and purchased quite regularly throughout the week. There's a lot of, it's a very usually a highly franchised engagement, and there's a lot of franchise businesses around the world, but particularly in the US.
Thank you. The next question is, who is your main client in South Africa?
McDonald's.
Great. And the next question is, who is your biggest competitor globally?
So biggest competitor would have been Session, but they were acquired by MasterCard some months ago, so it would now be Urban Airship, which just now call themselves Airship. So again, they're sitting on the Magic Quadrant.
Great. Okay, that is all the questions we've received on the chat, but thank you so much, Craig, and we wish you well with your placement. And if we have any more questions that come through after the webinar, we'll be sure to send them through to you.
Thank you very much.
Great, so we'll move on now to Victoria Potterina, who is joining us from Sydney via the VC. So Victoria is the CEO of TrueScreen, which offers the latest technology in cervical screening to help improve the health and well-being of women around the world, which is awesome. So over to you, Victoria.
Hello, can you see me? Yes. Hello, everyone. Good day. I'm very pleased today to be here and present TrueScreen. So I would like to start with one of the most popular slides, disclaimers, and I will quickly flick it through. Speaking about the company, vision of our company is very important, is that we believe that cervical cancer can and should be prevented. Actually, it's a fully preventable disease. And we feel very proud to be part of this mission, because it's not a mission for one company, definitely, but we are contributing to this mission with our unique real-time, non-invasive cervical cancer screening system. At the next slide, just a few words about our company. We are listed at NZX, as you are probably aware, and right now we are in the process of listing at ISX, which should be finalized by the end of this year. We are one device company. We develop, produce, and sell a TrueScreen cervical cancer system. We are focusing on low and middle income countries. And why is that? Actually, more than 80% of cervical cancer cases and death happen exactly in those countries, mainly because women in those countries do not have access to cervical cancer screening and to conventional methods of cervical cancer screening. We have dedicated distributors in all our key markets, and so we are selling through this network. We are FDA approved. Right now it's called an MPA in China. We have a CE mark as well. And we have extensive clinical validation over the last 10 years. So we basically quite known in a few countries where we are operating. On the next slide, just a quick reminder on how our system is working. As I share, we have a true real-time system, non-invasive, that doesn't require laboratory infrastructure, which is very important for our target markets, because it's quite an issue in some of them. And the system consists of a TrueScreen handheld device, intelligent cradle, and a single-use sensor that should be used with every test. How it works, basically the device issues optical and electrical signals, reads them back, and with the help of artificial intelligence-enabled algorithm, processes the data and defines in less than a couple of minutes if the tissue is normal or abnormal, and basically provides these results to the healthcare professional and the patient. As I have already shared, we are focusing on low and middle income countries because this is where we believe that our device is a great fit exactly in those countries. And also we believe that our business model is disruptive for those markets, because those markets usually don't have enough laboratories, and our system is non-invasive, it's accurate, real-time, very easy to train and to learn, and it is affordable, which is very important for those markets. If we have a look at this slide, basically it shows that the opportunity for our business is really big, because in those markets which we believe our core addressable markets, there are more than 1 billion of women eligible for screening. And we are right now present, and we are selling right now. We have sales to China, Russia, Mexico, and Vietnam, and their markets violet on this slide. And we also working to start getting sales in Eastern Europe, Africa, and India. On the next slide, it's just a few highlights about us as a company. As I have shared, we have a disruptive technology of cervical cancer screening, which is real-time, single visit, mobile, non-invasive, and reliable. We have a really compelling commercial model, because we are targeting the markets where our device is in a big need. We also have a revenue stream based on our single-use sensor sales, and those sales are growing higher than the sales of the device. So basically, once device is installed, so we start getting the revenue of the single-use sensor that is being used for every single screening. We do have robust clinical and commercial validation in those countries where we operate. And we have actually great team and great capabilities to support our business and focus on new markets. This is a quick helicopter overview of our company development. As probably any biotech startup, we have passed through certain stages, starting from the developing of the prototype of the product, well, technology, then prototyping of the product. Then we got approval from our key markets, including an MPA in China. Then we commenced sales in China and in other markets. Our device was recognized by World Health Organization in 2019. We migrated to NZX as well. We actually commenced big studies in China with Chinese obstetrician and gynecologist associations. We got results from 2 provinces right now. They're very promising. And where we are right now, this year and the next one, is a transformation actually phase for us, because we need to rebuild our, we are rebuilding our business to facilitate fast non-linear growth of our sales. So we are dealing with strengthening our team. We are dealing with R&D project to improve our margins. We are rolling out quite quickly in China and growing our sales there. We are setting up commercial infrastructure for Vietnam, Russia, and India, and we're dealing with ISX listing. So kind of wrapping up so that we can support a fast growth rate as we go in further. In terms of our financial results, we released it to the market. In 2020, our sales were down by 31%, mainly driven by COVID because it hit China, and China is our core market, delivering the bulk of our sales. At the same time, we managed to improve our EBITDA by 23%, mainly with reduction of our overheads. There was an improvement in operating cash flow, and quite importantly, we established service center in China, Russia, Vietnam, and Mexico. Also, very importantly, we made an efficient capital raise of more than 5 million in the midst of the year, so that we are fully enabled to support all our operations. Year-to-date highlights. It's till August. We grew our sales by almost 70%, operational sales, and we grew our operational volumes of SaaS by 80%. We reached the milestone of 100 installed devices. Those are devices used in hospital and clinic environment. We got the approval from Vietnamese Ministry of Health, and we made further progress across our key markets and appointed dedicated distributors as well. And we updated our branding, and right now we are rolling it out. So in terms of our key performance indicator, of course, is the number of installed devices. As I shared, we crossed the border with 100 devices, and we target to double. By the end of this financial year, we target to double the number of installed devices so that we reach 160 devices by the end of March 21. So what we are focusing right now is we are focusing on commercial rollout in our key markets. We are focusing on doubling the number of devices, installed devices. We target to receive Chinese COVA consensus for TruScreen in the next 6 to 12 months. We continue to roll out in Russia, and our distributor is making a lot of educational programs there. Definitely rolling out Vietnam and Zimbabwe. We also started establishing our presence in Eastern Europe, And we definitely continue to enhance our team so that we can actually deliver all those great things outlined above. So this is it for TrueScreen. If you have any further questions, you may contact us absolutely directly. On the left-hand side, you see my contacts, and on the right-hand side, contacts of our Chief Financial Officer, Guy Robinson. Thank you so much for your attention, and I'm ready to answer your questions.
Thank you so much, Victoria. It's a very important problem to solve for women around the world, so that's great that you are working on that. We do have some questions coming through on the chat. So the question is, do you see relying on one key market, for example, China, as a risk? If so, are you doing anything to help hedge this risk?
Also, very good question. To be honest, it's a dual situation, because relying on China is definitely a risk and it's an opportunity. I would start with opportunity because China is definitely the biggest market which is available to us, and it has huge needs for cervical cancer screening. So we are growing there right now. Our volume of SaaS sales is growing by 80% in volume, which is really big, and we see further growth potential, a lot of growth potential. In terms of the risk, definitely relying on one country and also taking into account the some geopolitical situation, China might be considered as a risk, and we are mitigating this risk through, first of all, we have a very good established relationship. We are operating through our Chinese distributor, who is with us for 5 years and investing in the business, and have been investing into the business for quite a while. We are producing our SaaS actually in China. So this product is produced in China. And also medical devices, they kind of stand a little bit apart probably from some other products. And that's why so far we have not felt any repercussions actually from some recent geopolitical developments, and we feel quite comfortable there. Having said that, we do develop other countries, as I have shared, and namely Russia, Vietnam, and Mexico being in our focus, so that we have more diversified portfolio, which will be better hedged from risk perspective.
Sure. And a little bit of a follow-on question, and you somewhat addressed it a little bit, but we'll delve a little bit deeper. With the focus on developing countries, do you experience any challenges in dealing with local institutions and regulators?
Actually, usually the work with regulators are carried out by our distributors. So they are facilitating registering the device and some other things. We are providing, of course, the full documentation and everything which is required for that. In general, we don't face any major issues with registration or any regulatory challenges up till now. I think that we need to bear in mind that we have a unique device with quite unique technology and in high demand from some perspectives, so that's probably facilitating. But in general, net we don't face any significant issues from regulatory perspective.
Thank you. The next question is, your device sounds great being non-invasive, delivering real-time results and not needing labs. It seems like a really great plus for other first world countries. Are you planning to market in more developed countries?
That's a fantastic, fabulous question. We definitely consider many opportunities, and we consider developed markets as well. But in the near term, we would like to focus on those markets that seem to be in greater need for our product, and those are low and middle income countries.
Thank you very much. And then one last question is, do you have competition in the market, and how is your device patented?
Sure, we do have competitors because there are well-established conventional methods of screening of cervical cancer, such as pap smear test or liquid-based cytology. It may sound counterintuitive, but in our markets, in low middle income countries and emerging markets, our main competitor is basically the lack of any screening, because a lot of women do not have any access to the conventional methods because they require highly qualified doctors and they require very well equipped laboratories in place, and sometimes they're just too expensive. So and the woman cannot afford to kind of go into the hospital 2 times, for instance, or 3 times for those screening. So we believe that our device is an ideal fit for those women who don't have access to conventional screening in those markets. Definitely, we have conventional competitors as well, which we take into account while we're developing our commercial strategies. Yes, our system is patented and protected, and we keep, for instance, for China, we keep a separate patent that is protecting our IP.
Great. Well, thank you so much, Victoria. I think that's all the questions, but as with the others, you know, if you do have questions, Victoria put her contact details up, or you can also come through to us if you didn't have a moment to note those, and we'll make sure that your question got answered. That's our tech roundup for today. So thank you so much to AFT Pharmaceuticals, Plexure and TrueScreen for joining us. We hope you enjoyed it, and we also hope that you will register for our December webinar. We will have another lineup of companies. So thank you again, everyone, for your time today, and especially to all of the presenters for their presentations and answering the questions, and we hope to see you soon.
Thank you.
Thank you.
Bye.
Goodbye.